Ticking time bomb approvals, they are real and they are in tow. We're going to talk about how that's affecting the property market at the moment, so stay tuned. Yeah.
Good morning.
How are you?
I'm doing well. How are you?
Good, thanks, Michael.
Good.
You
4
find
days till
you
Christmas.
find it very difficult to do these shows, to wake up to do these shows.
I'm designed as a nighttime person. That's how God designed me, but it's okay. I'm happy to grow.
until babies come along, then they're going to teach you a thing or two.
They will. For now, you're my best.
Shit. So guys and girls, this morning we're talking about, it's a really relevant topic because as a sales team in the Northern Beaches, it's coming up all the time between us, and we're seeing it with buyers over and over. It's coming out of their mouth all the time. And what they're saying is they've got a approval that was given them to the bank for their finance. And the bank said, there's your approval, go find a property. And this approval is going to last for 90 days. Now, if you don't have anything purchased, exchanged in that 90-day period, we will then have to re-review your situation, your documentation, and your current rate assessment, and then we're going to have a look over that as well. And there's shit happens if it goes past that 90 days. So, Michael, tell me what are you seeing this as well?
I'm hearing a lot from a lot of buyers as well. And look, during the middle of the year, it's maybe not as relevant in terms of, you got your 90-day, you got your 3-month timeline. You go, okay, great, got my pre-approval. Let's go buy something over the next couple of months. It's even more relevant at this time of the year, especially with what's been happening recently with a lot of rate rises. And now this time of year, when it comes to the Christmas period, where everything seems to shut down and as Mark always likes to say, Christmas is just one day, yet for some reason, everything seems to shut down in people's minds for weeks and weeks and weeks. And you can lose a whole month of purchasing over this Christmas period if you're just going, yep, I'm going to shut down end of December, middle of January, nothing happens till late January anyway, and then just shutting down and not looking at property. And all of a sudden, you've lost 30% of all that buying time when you could have gone to buy a property. And then next year, your borrowing capacity may be very different.
So this is the clincher where I think basically, you're busy, yeah. You're busy because it's just that time of year. You may be even on holidays and traveling as well. You're just busy, so that it's into that 90 days. Sellers selling their property, well, there's less of them. Are sellers more inclined to say, let's hit it in February than let's hit it now? And they're often coming to us for advice. Our advice is to hit it now because there's the stocks you're selling in isolation and you're not selling in competition with a hell of a lot of other properties. There's going to be a lot of competition. But for a buyer, what a lot of people don't realise is the banks put on a buffer. So the banks will say, okay, before I approve you, let's look at your repayment ability. Let's look at your deposit. And this is what I really want to focus on. Let's look at your repayment capability with current interest rates. So what they'll do is they'll put their 4% or 3% on top of the current interest rates, and they'll say, we want you to be able to cover that with your income. And if that's the case, we're going to give you $600,000 or $700,000 as a loan on that interest rate. But what's actually happened is the rates since this person got assessed, the rates have gone up 2 or 3 times. They've gone up 2 or 3 times. So then that's actually changed the capacity and the potential lending of the purchaser. So if the purchaser, it's a bit of a cool thing because it's a bit of a cheat. If you still buy within that 90-day period, you don't. That's okay as far as the banks are concerned. They actually haven't changed that. I'm surprised. But if you go to reapply, they're going to bulk it. They're going to bulk it up with the new rates, and they're going to go. You can't borrow 600,000. You can borrow 400,000, and you're going to go. I can't buy anything at that price.
And also bear in mind now over the Christmas period, we've got December now we've got January, where they're not going to be changing the rates, my understanding is, until February as well, or where they meet to potentially change, put them up, put them down, leave them the same. So you've got now about a month and a half of this sort of stagnant period with rates to make sure you go and secure something. And you actually just made a very good point. I just sort of then, when the banks are loaning you money, they're buffering off, okay, what's today's rate? And can you afford X amount over as well? My understanding is about 3% more than what the current rate is what they try to build in as a buffer to make sure that you can afford. Might be a little bit more, might be a little bit less. But it's actually really good to see at the moment, everyone that's been buying over the past 6 months and into next year as well, it's going to be building a really strong backbone for the Australian economy, in my opinion, with people buying property, because the banks are basically saying what you're buying now, you can afford even up to potentially 8% interest rates. I don't believe they're going to go anywhere near that high in the short term. So it's just really, really good in terms of people going to be buying properties where they can afford a much, much higher interest rate. And it just means that it's going to be a lot stronger, a lot less defaults. So I think it's a really positive thing. And touching on that as well, a lot of people seem to think that, I'll wait till next year. Yeah, my borrowing capacity might come down a little bit, but the market's going to drop even more than that next year as well. Guys, be very, very careful with that. If your borrowing capacity comes off a bit more, obviously what you can afford is going to be different. With what's going to happen with the market in terms of whether it's going to come down a whole lot more or not, no one has a crystal ball. We've come off a lot already around the northern beaches, around Sydney, 20 up to 25% on average for a lot of properties. But it's a huge amount. And I think people, when you take a step back and look at that, any market that's come off a quarter of what it was worth before is just a massive amount. For that to come off substantially more, I'm not talking like a little bit, but substantially more from where it is now, there's much bigger ramifications for the economy than just, as a buyer, I get to buy a cheaper property. And you're in bed with the government and you're in bed with the banks. And the government and the banks do not want property to fail.
I think everyone's got to be really careful on this topic, because if you think about it, when you buy a property from and bank lends you the money, they want a 20% deposit. They want 20% equity. That on a new purchase has been completely taken off the table. The banks are in the red. You may be in the red paying, but their balance sheet is in the red on equity, because they you had a 20% or 10% deposit. Now you're in the red. So does the Australian government want to see that red go even more red to negative 30% or negative 40%, where the banks are in trouble more than the consumers? And that's where I think if the banks have got the power, if the governments have got the power to leverage interest rates on the back of inflation, the banks have got the power to leverage interest rates on the back of property price and saving the property market or saving the economy, like they did in the GFC, like they did in the recession, like they did with COVID. So they can move those rates up, but those rates go in two directions. They can move them back down. So, I think that if anyone's going to be buying that's got a finance approval on the back of today's topic, it's very important to get in and don't forget about your approval. Literally, people can forget about it. And number two, their concern is like, all right, I don't want to buy something that's going to be worth less a year later. I think that critical turning point we're actually over. I personally, it's my opinion, I think it's the bottom of the market.
I reckon you're pretty much on the money. Like, there's no exact way to 100% know until it's already too late, until it started going up. But if we're not already there, we're very close to where I think it's a marginal difference. Once again, that's just my opinion as well with it. And this is a good case study for you guys as well. And this is something I think it's very important to understand going into next year also. Let's say, because people are saying, oh, people are going to come off that fixed interest rate cliff. They're going to have to sell. They're going to have to sell. A lot of people we're already speaking to have already put into place financial systems for themselves, or maybe have already come on the market knowing that times are going to be a little bit tougher next year with their interest rates. So maybe they've already started making that move. Let's say you get someone that doesn't think that far ahead. It hits them like a brick wall and they go, I really just need to suddenly sell now. And they go, I have to sell. I'm going to sell my property for cheap, but I just got to get out of it. We've had a couple of situations where, with the market being lower the way it is now, we put quite cheap guides on properties where owners are going, yep, we want to make sure it's sold and done before Christmas. They're happy to accept quite reasonable prices. And then because we've put on quite an attractive guide on it, the buyers have ended up bidding the property above well and truly where the owner was happy to sell at anyway. And the buyers pushed it to where I would say market value is, and it ended up selling at a great price regardless. So I wouldn't be surprised next year if all of a sudden all these bargain properties where owners have to sell, according to all the buyers that are out there, don't end up getting bid back up by the buyers anyway, because it is so cheap. So that means there's still going to be lots of people wanting to buy it, and it still pushes it back up to a reasonable level.
Yeah, but
I just think
I reckon it's a bunch of shit when people talk about the balloon of interest rates next year. That represents 1/3 of home loan owners, right? If you own a home loan, 1/3 of them are fixed. Everyone's assuming that they were fixed at 2%. Only the fortunate few fixed at that. Not 1/3 of the market. You know, the banks are more clever than that. So, you know, those guys were paying a premium to fix their interest rates, which they're coming off now. I get that the premium wasn't 5% or 4%, but it was probably like 3 or 3.5. Some were at 2. But listen to this one: the fixed interest rates that are there. You've got already 2/3 of the market paying more than what their rate was, and look what's happened in the last 12 months.
That's
right?
Right way.
So,
right.
You know what I mean? Like, in the 66% of the people have already gone from an ultra low rate to an ultra high rate in their eyes. They've doubled their rates. So, you know, it's gonna emulate a little bit to what we've seen, but everyone's had time to prep, and the shocks left the market. So that shock was more, believe it or not, was more damaging, because the government was saying we're 2 years away. Anyway, we've strayed. We talked about time bomb of ticking finance approvals over the next 90 days. That's a show, and
take advantage of it, boys and girls. And you've got your approval now. Take advantage of it. Just a lot of agents away. We're working all the way through the Christmas period. So there are transactions that are going to be done. If you see properties that you like, yes, it is physically possible to buy over this Christmas time. It is a great time to take advantage of your approval there, because obviously you're going to lose a whole month otherwise leading into next year. So it's a great time to take advantage.
Boom. Have a great day.
Thanks, guys.
See ya. Bye.